Hey everybody, this is Lance. I just wanted to go through today for those who are going to be buying a home or thinking of buying a home, or it's been a long time since you bought a home. I just wanted to have a little chat about the home buying process. Now, keep in mind, this is me working in Northern California. So it can be a little different everywhere in the country. For instance, our contract is 26 or 28 pages long, not including all the other forms that go with the purchase contract. So when I'm talking about this, like I said, every state is different. Some states have a very short purchase contract, some states have a much longer contract. But anyway, the process itself, it's kind of the same or should be the same everywhere. Um, so let's just get into this. So I'm going to be talking about my guide. And if you guys want a copy of this guide, just DM me or send me an email at lance@lancehulseybroker.com. And I'm happy to send you a PDF of this. If you'd like a hard copy and you're local, let me know. I'd be happy to drop off a hard copy for you. And if you're a real estate agent and you want the template that I use for this, I'm happy to give you guys the template as well. So um, let me know. It's a Canva template that I've modified. So again, let me know if you'd like that. And I'd be happy to share that with you as well. Anyway, I'm also going to talk not about just what's in this, but also what's the process in general and some of the idiosyncrasies. So diving right in, um, one of the things is, what is the process of buying a house and how does that journey begin? So, first thing is typically you've probably reached out to a lender and have some idea of your purchasing power. If that's not the case and you reach out to a real estate agent first, that's great. We'll introduce you to some lenders that we work with. Typically, we work with vetted lenders and we know that they can get the deal done. So don't hesitate to call your favorite real estate agent and ask them for recommendations on lenders. But if you already have a lender, whether it be your bank or a mortgage broker, um, if you get that pre-approval letter, which is different than a pre-qualification. A pre-qualification is basically just you getting a promise that they'll do a deeper dive into your credit history and whether you can qualify for a loan. Us real estate agents, we want to see a pre-approval letter that tells us that they've vetted your credit, they've vetted your income, and you really are ready to buy a property. So, the difference between pre-approval and pre-qualification. So, pre-approval is what we're looking for. Anyway, so prepare your finances, make sure your credit's in order. Make sure you have enough money for the down payment. Down payments typically are about 20% max for a down payment. There are different loans like FHA, which is 3.5 to 5%, I believe. VA, you can have even less or no money down. There's USDA loans that have different rules, and those are in agricultural areas. Anyway, I don't want to get too much into the lending side of this, but make sure that you have done your credit check. Make sure that your credit is good. Make sure you have the cash and add another 1% for closing costs. And then make sure that you add the fees for your real estate agent for or her commission. In California, in most states, actually in all states now, commissions are completely negotiable, but it's often that you as the buyer have to pay the commission if you can't get the seller to pay it in your contract. Um, we might do another video on that. But so on top of the 20%, if that's what you're going to put down, you probably want to cover another 3.5 to 5% for all the fees and costs of closing. So just keep that in mind. Um, so maybe as a good rule of thumb, you should probably have on a conventional loan, 25% of the purchase price liquid so that you can purchase the property, make the down payment, and pay all the closing costs, including title, insurance, and everything. Um, that being said, um, the next thing is to get your mortgage documents. If you haven't already done that, get all your income statements together. Do a financial root canal on yourself and make sure that you have all of those documents. The banks will want to see, or the mortgage brokers will want to see, that you have all your assets, all your debts, everything spelled out, so it's easy for them to run the credit and make sure that you're pre-approved without a big hassle for yourself or for them. They'll probably want to see your tax returns. And if you're a small business owner and you're investing, there are different loans that will do loans based on your P&L of your company. So keep that in mind. On top of that, you want to start shopping. So if you're pre-approved and you haven't found a real estate agent yet, a lot of people go to homes.com or Zillow and they start looking, laying in bed on a Sunday or Saturday morning. That's a great way to start, and it helps us as real estate agents knowing kind of what you like. So if you're looking at a specific kind of house and you can share those with us, it gives us a great idea. Otherwise, we're going to sit down with you and talk about your wants and needs. We're going to go through all the things that you would love to have versus all the things you absolutely need to have. Let's say that you have kids and you want them each to have a bedroom, and you have 3 kids, then you're going to need a 4-bedroom house because each kid gets a bedroom, plus you and your spouse get a bedroom, or significant other. Once we get shopping, then we just go out and start looking at different homes, hopefully in your price range. Sometimes we'll look a little bit on either side of your price range, just because sometimes houses have been on the market for a while, and it's great to, look at houses that might push your price point a little bit, because we might be able to get into contract on those houses and you end up getting a little bit more house for your money because the house was sitting there and the seller is willing to negotiate. So keep that in mind. So if you tell your real estate agent that you want to spend 300,000, 500,000, $1 million on a house, they may push that a little bit because they know the market and they know that they can, maybe negotiate on your behalf to get that house into contract at a better price than you expected. Um, Once you're in contract, then we do things like the home inspections, unless that was provided by the seller. Um, and we do a home inspection, a pest inspection. If you're in rural areas and it has septic, we'll do septic. Or if the propane tank is leased or owned, we'll want to find that out, unless it's like public utilities, water lines, all that kind of stuff. So the roof. And any other inspections you think you might want, inspections regarding the neighborhood. I highly suggest for buyers to go out into the neighborhood and talk to the neighbors. So door knock the neighbors in the neighborhood of a house that you might want to buy, and see what the neighbors have to say about the property. It's always helpful to introduce yourself and say, "Hey, I'm thinking of buying that house, and I'm just kind of wondering, what's this neighborhood like? What are your impressions of the neighborhood? Um, uh, Check the Megan's Law database, you know, uh, for sex offenders in the neighborhood, things like that. Um, so you'll want to do all those kinds of things, and you should do those as the buyer on your own, and then share that information with your real estate agent. The real estate agent will help you with inspections and getting the vendors for those if they're not provided by the seller. Um, so you don't need to worry about that. But all those other things, if you want to inspect permits and zoning with the city or county, you're going to want to go down there and do that yourself. Your real estate agent can come along with you, but really you should initiate those things. And there's reasons for that from a liability standpoint for you and your agent. So keep that in mind. Other thing is you're going to ultimately have most likely a property appraisal, unless you're buying a property for all cash. And so there are several contingencies in the contract here in California, especially. We have a property contingency, a loan contingency, an appraisal contingency, a title contingency, um, and so the property contingency is your time that you can inspect the property and satisfy yourself about all the things you like or dislike about the property, and decide if you want to move forward with the contract. The loan contingency is for your bank or your mortgage broker to clear the loan through underwriting, and that's the process where the lender or the investors of the loan have underwriting standards that they need to meet, and they want to make sure that the loan meets their standards before they approve it and give you final approval to buy the property. The appraisal contingency is exactly what it sounds like. You want to make sure the house is appraised at the value, at least, of what you're buying it for. So let's say you're buying it for 500,000, you want the appraisal to come in at 500,000. Now, if the appraisal comes in at 490,000, that gives you a chance to negotiate with the seller that $10,000, or you can walk away from the purchase if you have that appraisal contingency in place. Or in the adverse, let's say that you bought it for 500,000 and the appraiser comes in at 525,000. Well, the good news is you just got $25,000 worth of equity on your property. So, congrats to you. And the one thing you should know is that you do not need to share the appraisal with the seller unless you're going to do some negotiation. So let's say it comes in at 525, but you're buying the house at 500. You don't need to share that with the other side. But if the house comes in at 490 and you want to buy it for 500 and you need to negotiate, well, then you're going to want to share that appraisal to prove that, hey, here, the appraisal came in at 490, not 500,000. And, what are you guys going to do about that? And that's something that you and your agent will strategize on how you're going to respond to that with the seller and the seller's agent. So that's the property appraisal. The other thing is the pre-closing preparation. So, there's by law, there's a thing called the closing disclosure, and your title company will send that to you. That gives you a breakdown of the purchase price, all the costs, and all the closing costs associated with you buying the property. And you want to review that in detail. And then you want to make sure there is another contingency. That's the insurance contingency in California, which is relatively new. And you want to make sure you can get home insurance. We have a hard time getting home insurance in California. It's not so bad probably in other states. And I'm specifically talking about California with this insurance contingency. You want to make sure that you review all of your key documents. There's also, in that title contingency, there's a preliminary title report, and that preliminary title report tells you everything about the property and any covenants or restrictions. If there's an HOA, it's going to show you the HOA documents, and it's going to tell you what the rules are if there are neighborhood rules. So you're going to definitely want to read those. Work with your real estate agent to go through those. If there's an HOA, you want to make sure the HOA doesn't have any special assessments coming up as soon as you own the house. If they charge monthly HOA fees or annual, you want to know that and how much. If they have an assessment that they haven't assessed yet, and let's say they had an HOA meeting about it, you're going to want to know about that because that's something you can negotiate. So make sure that you read all of the documents that you get from your agent. And if you don't get a document you feel you should get, make sure you ask your agent for those documents, or at least ask for guidance on how to get them. Any experienced agent should be able to walk you through that with no problems at all. An agent really has a fiduciary responsibility to you and should be looking out for your best interests. I personally, having 20 years experience, make sure that I treat my client's home purchase as if it was my own. And I go through everything tooth and nail just to make sure that everything is detailed. And I've explained everything that I could possibly explain about the reports, the condition, and everything. But that is not a substitute for you doing your own due diligence and reading those reports yourself. You have to be invested in your own purchase. You can't just rely on your real estate agent alone, because you'll get yourself into trouble, and you're not doing yourself a service if you do that. Um, when you get to the closing table, make sure you bring 2 government IDs with you. Um, you also want to bring the final amount of your deposit. So you deposited when you wrote an offer. Usually it's anywhere from 1 to 3% of the purchase price, which is due within a couple business days. So if you had a $500,000 purchase, you'd have to put somewhere between, um, 1% is 5,000, so $15,000 down initially. So when you're at the closing table, you need to come in with the rest of your down payment based on whatever percentage down you're putting. So just remember that. So you need to have that cash liquid at the closing table. Um, you'll have your closing disclosure so that you can review that again. That's the thing that you should have gotten a few days before closing. You're going to want to show proof of homeowner's insurance. You definitely want your house insured on the day of closing. If something was to happen the day after closing and you didn't have your insurance in place, you're on the hook. So just keep that in mind. So let me see. Um, um, you want to, when you're back to the loan process, you should understand the difference between fixed rate loans and annual percentage loans, FHA loans, VA loans if you've been in the military. Um, so, and they may bring up private mortgage insurance. So make sure you understand what private mortgage insurance. I just did a little video short that talks about APR and what that means. So go watch that. It's on my channel. Um, so, um, let's see. Oh, title, how to hold title. This is something that you'll discuss with your title or your escrow officer, but just so you know, there are different ways to hold title of your property. So whether you're single or married, or you're in a partnership with somebody buying this house, or, so, there's typically community property. There's community property with right of survivorship, joint tenancy, tenancy in common, partnerships, and trust. So those are the typical ways, and have your escrow company explain those to you in detail. They usually have a form that spells all that out for you. I know I'm going fast here with all this stuff, but those are things that you're going to want to discuss as well. Um, make sure you do all your contingency release inspections. So in California, we typically by default have 17 days for home or for inspections on the property, unless we shorten it in consultation with you when we write the contract. So, for instance, that would give you 17 days to do the roof, the any inspections on the property, the air conditioning, for instance. Just making sure everything's okay. The bathrooms, make sure smoke detectors and things are in there. All that stuff. If we shorten it, it's probably because those inspections were all provided and they're from trusted inspectors. So instead of 17 days, if we know the house might be competitive, we might consult with you and say, hey, let's shorten that to 7 days or 5, or even waive the inspections. Now, if you waive the inspections, there's a big red warning flag here, and that means that you're accepting those reports that you saw as valid, and it means that you can't use any condition issues as a reason to cancel the sale of your contract. So when it comes to property inspection contingency, make sure that you are absolutely 100% satisfied on the condition of the property. Because if you're not, you're going to uh, create a liability for yourself, and you will not be able to cancel the contract if you waive those inspections when you submitted that contract. So I recommend that at a bare minimum, have 3-day property contingency so that you can rush and do some inspections if need be, or if there was some lingering questions you had, or if you get cold feet. Having that 3 days can help you back out of the transaction if you find a condition issue that you just can't live with. So, and then with loan and appraisal, I always recommend as your agent to consult with your mortgage broker or your banker. They know how fast they can approve a loan, and they know how fast they can get an appraisal. So I usually call your lender and I say, hey, I'm writing this contract for the client, and I want to know what your recommended terms are for the loan and appraisal. And sometimes they will fully underwrite a loan before you even submit an offer. And they say, oh, we don't even need a loan or appraisal contingency because they're already approved and we've already fully written it. So they can tell me, oh, we don't need any days. So that helps you. It makes it a more competitive offer if you're up against somebody else who wrote a 7-day property contingency, a 10-day loan, I mean, a 10-day appraisal and a 12-day loan contingency, and you don't have those contingencies, and you guys are both at the same price. The sellers usually consult, or the seller agents consult with their sellers, and they say, okay, here's the apples to apples comparison of these offers we got if it was multiple offers. And, offer A has all the contingencies in place, and offer B only has a 3-day property contingency. Which one do you think you want to work with? Well, I can tell you from experience that most sellers want the offer with the least risk to them, which means that those contingencies are waived. Um, so, those are a couple of ways that you can make your offer more competitive. There's also a breakdown that you should ask for, and that is who pays what. So when you write your offer in California, um, depending on what county you're in, certain escrow costs are either split 50-50 with the seller and the buyer, or they're on the seller or they're on the buyer. Um, and so those costs usually are transfer taxes, city transfer taxes, if there are transfer taxes in your city, county transfer taxes. Most counties in California, I think all counties in California have county transfer tax. The closing costs from the escrow company, title fees, escrow fees, notary fees, blah, 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 all those different kinds of fees, which are all in that document that I mentioned before, your closing disclosure document. But when we write the contract, we make sure we follow the county by county standards. So some counties, like I said, are 50-50 on everything. Some, like Santa Cruz County, where I work in, but then I work in Santa Clara County, where some of them are on the seller, not the buyer. So those are things that we'll walk you through in the purchase agreement as well. And don't just let your agent put nothing there. That's a big no-no. So make sure it gets filled out correctly. Sign off. Often when you're signing off at the end of the purchase, when you get to the end and you're ready to sign off, if you're not local, you can have a mobile notary sent from your escrow company to you. Otherwise, you can go to their office and sign off all the paperwork. The lender will send over a big package of paperwork, and then the title company will also have a packet of paperwork, and you'll have to go through and sign all that stuff. And it takes about an hour to 2 hours to sign everything on a typical contract from the time you get there until you leave. So, and then don't forget to budget for property taxes. So in California, we'll have 2 property taxes that you should be worried about. So when you buy the house, they'll catch up the property taxes on the closing document for the current year. But if you bought that house and it was originally assessed at $300,000, you're paying $500,000, at some point within 2 years, and it can take up to 2 years, the county's going to send a supplemental assessment for that $200,000 difference from what it was assessed at when you bought it and what you paid for it. So that's on you as the buyer. So make sure that you have budgeted for that $200,000, because that could be an extra $2,000 that you didn't think you were going to get a bill for, and it can come up to 2 years after you bought the house. Then you want to make sure that you've budgeted for the yearly property taxes going forward, year after year after year, and that's typically the purchase price times a 1% tax rate. So if it's a $500,000 house, it's going to be about $5,000 a year. But then if there's any bonds or any Mello-Roos or anything like that, it'll be a little bit more. I will tell you, here in Santa Cruz County, we have lots of bonds. So a $5,000 home will probably be about a $7,500 property tax bill per year. So just make sure you budget for that kind of stuff. And there is a sheet um, that you get usually in your disclosure packets, your natural hazard disclosures, that actually, funny enough, breaks out your property taxes and tells you to remember to account for your supplemental taxes. Otherwise, ask your agent or ask the escrow company to give you a breakdown of not only what you're going to be paying as a potential supplement tax, but what your yearly taxes will be going forward. And in California, they're capped at 2% increase a year. So if you're paying $7,500 this year, that first $5,000, which is 1% of the purchase price, can only go up 2% a year. The bonds are not part of that 2%. So it would go up from 500,000 to 502 or 501,000. I think that's 2% of, well, whatever. No, 502,000 the next year as assessed value. So just keep that in mind. I know that, like I said, I know this is a lot. So if anybody has any questions about this video, and they either drop them in the comments, send me an email, lance@lancehulseybroker.com, or DM me. My phone number is everywhere. So just, I'll be happy to answer any questions you guys might have. So, and then once you get your house, you got to also plan for the move. So make sure that you have a moving checklist. Um, I can usually give you a moving checklist that kind of goes over the big things. So just make sure that you've planned for that as well. All right. Let's see what else. You want to make sure that you transfer utilities into your name, any subscriptions, any financial institutions. Make sure mail comes to you. So, do the mail service to your new house. And then your old property, make sure you notify whoever that you want your mail forwarded so that you get any mail. A lot of people forget about that, funny enough. So don't forget about that. Last but not least, in case you guys are thinking of doing this on your own, let me just warn you. First of all, I wouldn't do that. This is the biggest purchase of your life, and your agent does have a fiduciary responsibility to you. So they're going to be looking out for your best interest. That's not to say that there are different quality real estate agents. So, um, there are new agents who don't have a lot of experience, so they just don't know to ask a lot of questions, and they just need to gain that experience. And if your brother's uncle's or your wife's uncle's cousin is a real estate agent, but they don't ever sell any transactions, um, you don't need to be loyal to them. Find the agent with the experience in the area that you want to buy. All right. That's all I'll say about that. And if you need recommendations, let me know. I know agents all over the country. I've been doing this for 20 years. Um, Also, there's a difference between a realtor, a real estate agent, and a broker. And you may ask, what's the difference? A realtor, which is REALTOR, is somebody that belongs to the National Association of Realtors. A real estate agent doesn't belong to that association and can't use that term. And then there are brokers. I happen to be a broker, which means I did extra education. I also had the experience. And then in California, after you've had so many years of experience, you can sit for the broker exam. As a broker, I don't need to work for anybody else, but I do, because that's why I call myself a broker associate. I work for Keller Williams Thrive Santa Cruz. And so brokers that work for another broker call themselves broker associates. I also own a property management company, so I'm the broker of that, but I'm a broker associate when it comes to real estate sales. I hope that didn't confuse anybody, but anyway, and a real estate agent is just basically somebody who's licensed but doesn't belong to any associations. They can call themselves a real estate agent because they are licensed. They just chose not to align themselves with our National Association of Realtors or the California Association of Realtors, or in my case, those two plus the Santa Cruz Association of Realtors. So most agents belong to those associations, but there are a few out there that like to be lone wolves, and there's nothing wrong with that. There's no added benefit necessarily when it comes to purchasing, other than They may not have access to certain forms. We get access to forms, so just remember that. So, and those forms, have been vetted by California attorneys or whatever state you're in. So when you work with an agent who's associated with the local association or the state associations, they're getting the official forms that they need to do those purchases and write those purchase contracts. So that might be what's a little different. Agents, if you're listening to this, I'd like to get your comments on what you think might be the difference between an agent and an actual realtor in your specific area. The other thing is commissions or fees. We need to talk about that because that's been in the news a lot in the last couple of years. All fees are negotiable, and that includes on the purchase side and on the sale side. So if you're a real estate purchaser, if you're buying your first home, you'll need to negotiate with your agent what the commission's going to be. Then, when you write the offer, especially in California here, you're going to notify the seller that you would like them to either pay that commission to your agent, or you can pay it directly to your agent yourself. And if you can't afford to pay it to your agent, there's actually a box that says that. Um, as agents, we try not to work for free. We have people to mouth the feed as well. And just like any other profession, we live and die by the income we generate. So we'll do everything we can to help you figure out how our fees are getting paid. But um, uh, often sellers are willing to pay not only their agent, but the buyer's agent. And uh, but that's not published anymore based on some recent lawsuits that were nationwide class action suits. So just know this: all commissions are negotiable. All commissions and all fees are negotiable. Oftentimes, your lender fees are negotiable. So just make sure you have the conversations with your agent and your lender. Um, if you try to buy your house without an agent, you're probably not going to have access to the official forms. And honestly, you're creating a major liability for yourself that I don't think you really want to do. Just hire an experienced real estate agent. It's going to save you more than it's going to cost you because their experience is invaluable, especially if they've been around a long time. So just have the conversation, make sure you understand the process, make sure you come to terms on the commissions, and move forward with the more exciting part, which is hunting for and buying your next house. Um, so one of the things agents have that you might not have if you're thinking of not using a real estate agent is market access, the ability to do property valuation correctly, negotiations, the legal complexities of the contracts, transaction management. There's a lot that goes into the process from start to finish, and that's what we call the transaction management. Um, we're able to do problem solving that you may not be able to do much more quickly, especially if you're on timelines. Um, uh, you can keep somewhat of an emotional distance from the process if you let your agent do some of the heavy lifting for you, if that's something that's important to you. Our relationships with inspectors and lenders and appraisers and everybody is something that might be a huge value to you. So that's a good reason to use us. And any post purchase support. I get calls all the time from past clients who I've helped buy houses. They're looking for a landscaper, or they're looking for a plumber, or they're looking for any kind of vendor, or they just need a shoulder to cry on because they're frustrated about something. So, um, you know, I firmly believe that you should never stop helping your client, even if the purchase is done. So I always invite all my clients to call me with any questions or comments they have. Um, Oh, and make sure you get a not only insurance policy, but make sure you get a home warranty if that's important to you, because sometimes you buy a house and a couple months later the water heater will go out or the dishwasher stops working, and you can get those home warranties for five, six, $700, and there's a small deductible, but boy, they'll save you a lot of money on the other side if one of those expensive appliances goes out. And that's another box on the purchase agreement that we would discuss and check, and you can decide if you want to buy it. Sometimes your agent will give it to you as a gift, or the seller. You can ask the seller to pay for it at closing for you. So just keep that in mind. Um, so anyway, that's kind of in a nutshell the whole purchase process. I know we went through a lot and we went through it fast. I'm trying to think if there's anything else I missed. If there is, drop a comment. Maybe we can do another follow-up video later, but that's basically it. So if you're looking for an experienced agent, ask them questions based on this video. Do you do this? Do you know about this? How do you handle this? So just, work your way through the process. And if you're an agent, I'd love to hear your comments on what you think about this video. Don't forget to like, comment, and subscribe. It helps this channel as we're growing. We have about 650 subscribers and we're growing fast. So I really appreciate everybody and I thank you all for helping me out. And I look forward to doing more videos in the future. We're going to be all over the place. The channel is called Everything Real Estate, and I hope to cover everything real estate. That goes for sellers, buyers, investors, people that are just junkies regarding real estate and want to know what's going on in the real estate world. If you're an agent, I'm going to have stuff for you as well. So anyway, thanks you guys. Hope this was helpful, and we will talk to you soon.